Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Now, today is Monday, November 17th, and my name is Raleigh White, and I'm coming to you live from a kind of an overcast day here from Austin, and there's actually a hint of rain in the air, and we could always use rain anytime here in Central Texas. But I'm going to be your moderator today, folks, and in today's session, Roger is going to be covering a range of important topics with a focus on how he uses the data miner software every day to find the top seasonality and spread trade opportunities in the markets. And to that point, today he's going to be talking about the latest updates coming to the data miner software, some exciting news there. Secondly, he's going to talk about why waiting for earnings is the best time for time spreads. And then, folks, he's going to give us a very special introduction to diagonal spread trades, how they work, and why seasonality helps them. And he's going to give us some examples of diagonal spread trade setups and entries. And then, as a special bonus, he's going to give us the top stocks that are currently on his midday watch list. Now, if you have any questions during Roger's presentation, please type them in the chat window and we'll address those periodically throughout his presentation. Also, folks, remember that the chat is open to everyone, and we do have a couple of ground rules. Number one, always be kind and supportive in your posts. Number two, keep on topic with your posts. Number three, no political discussions allowed here whatsoever. And also, folks, please, please, please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger is going to be sharing, because after all, he's taking his time out of his busy day to give us an edge in the markets and to help us all become more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock Eastern Time, bright and early, for Roger's pre-market briefing, you'll note that there were some pretty key catalysts on tap for today. Number one, keep an eye on the chip sector. NVIDIA was down 1% coming into the open. On the Magnificent Seven front, we did see that Google was up a whopping 4% coming into the open. On the infotech side of things, folks, news wasn't that good. Dell was down 6% and HP was down 2% coming into the open. And then on the Fed front, we knew that we had Empire State Manufacturing Index data coming out. It actually came out a little bit better than forecasted. And we have construction spending, but we also have three FOMC speakers that are going to be talking today. These all have the potential to have an impact on the markets. And for those of you that are wondering, why do we even talk about these catalysts? As Roger likes to say, we're focused on critical information that is either known or will be known during today's trading session, but is not yet, priced into the markets. And so from that standpoint, each one of these catalysts represents volatility. And we know what volatility means. It gives us the potential that things could move either way, and we just need to be careful about that. Now, on the small cap watch list front, Roger gave us 6 tickers this morning: GLMD, AMIX, VEEE, GNS, ZYME, and SGML. Now let's go ahead and let me switch my screens here for a minute, and let's take a look how the small caps are performing. Now, looking at my window here, you can see that I've got 8 panes that are up, and 6 of those, these 6 here, have the small caps from this morning. So on GLMD, we know that the pre-market high was $1.65. The market opened, it's right here at $1.18. Doesn't look at this point in time like it's going to make a move into and through that area to give us an entry. Now, on AMIX, on the other hand, this was a nice trade for us because we actually had a hit and we hit our profit target. So at this point in time, right when the market opened up, right at about 8:30, we can see that the pre-market high was $1.30. We shot right through that level and came all the way up to this level right here. What is this level? This is 15%. So I look for a 15% profit target or stop loss when I measure the performance of these systems. We came right up to that point, and then we were traced back, turned right around, and came through it, and actually ended up being about 20% up on the day with a high of $1.55. So this is a winning trade. This line that I drew down here would have been the 15% stop loss, and I like to plot both of those when we see our entry signal. So we had a hit here in AMIX, and this is a winning trade. The next one over, VEEE, the pre-market high was $3.43, and as you can see, it's opened up and basically done nothing. It's flat as a pancake, so nothing happened there. In the lower left-hand corner, we have GNS. The pre-market high was $1.56, and it also opened and has just basically been doing nothing. Over here, we have ZYME. The pre-market high was $32, and I put an asterisk on that because Roger said, you know what, guys, this is kind of expensive for a small cap, but I'm going to put it in there anyway. But the caveat was $32 per share puts it outside of the normal range of what we consider a small cap to be. But we can see it opened up here right around the $24 level, has been moving sideways and nothing there. And then lastly, guys, SGML, the pre-market high was $9.79, and it opened up, dropped lower. It has been chopping sideways right around $8 here. Not sure it's going to make a move there whatsoever. Now, if you're wondering what I have in these two panes here, this is the SPY. This is a 15-minute chart, and you can see I plotted Roger's two levels from today. He put a support level down at 670 and a resistance level at 676, and we can see that we came into and through support here, bounce back up. This pane right here, this is the QQQ, and once again, these are the two critical support and resistance levels. Support at 606 and resistance at 615. These are two levels we're keeping an eye on. So coming back to the original presentation here, before I leave the small caps, I just want to let everybody know that Roger's selection process here is not only based on price action, but primarily he's looking for extreme pre-market volume. And when I say extreme, I'm talking about a move, a volume that's about 100 times what the normal volume is for him to consider even listing one of these small caps as a potential. Also, folks, we want to remind you that small caps are their own animal. Okay, they're not impacted by the normal things that we look at the market, like catalysts, for example. And the reason that is because institutions, hedge funds, the big boys, they don't put any money into small caps. So it's just retail traders like you and me. So it's not driven by the institutions. The other thing is this: is if you consider any of these small cap trades, please, 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 only look at trading them during normal market hours. And if you're not filled by 2 p.m. Eastern time, I wouldn't even consider keeping the trade on. And by the way, if you do get your fill, never, never hold them overnight. Now, as far as Roger's large cap pre-market stock list was concerned, he gave us 10 shorts. And of the 10 shorts, we see that 5 of them here, DXCM, DECK, EMN, CW, CDW, and RMD, they all have asterisks. And the reason why they do is because those are potential A-line setups. So Roger is going to be paying particular attention to them. And if those setups occur the way he likes to see them, more than likely, he's going to share them with his A-line customers. Secondly, he shared with us 11 longs. And so you can see those listed here. And once again, for those of you that may have not been with us this morning, when Roger, shares these watch lists with us, he spends a few moments on each one of these tickers. He shows you the charts. He also identifies critical levels to pay attention to. And if any of his shorts or longs meet his specific criteria for what looks like a good trade, he is going to go ahead and more than likely take those trades and share them with the people in the pit and his other premium services. Now, as far as Roger's closing pre-market comments, we noted that coming into the open to the day that the futures were neutral. They were up slightly, but they were moving sideways into the open. He did note that bonds were below the 8-day EMA, sitting right on top of a critical support area, and that the VIX had inched a little bit higher above 20. He also, when looking at the stocks and at the sectors and things of that nature, said, look, guys, there's no real directional bias coming into the open of the market. And there's no real upward sector momentum that's going on whatsoever. So he pretty much expects that today's range probably is going to mimic the overnight range. And the overnight range actually was pretty wide, but he sort of expected that things would just basically stay in that range. He also reminded us all that it's Monday, folks. And typically on Mondays, you can expect a slow morning session. And if things are going to pick up, more than likely in the afternoon. And of course, that assumes that there's no critical news that pops out of nowhere. Also, then he concluded by saying, guys, just be cautious. Be cautious and keep your eyes on the QQQ and the SPY, in particularly at the critical support levels that I shared with you a few moments ago. So we're delighted to have everyone here with us. We've got a great agenda lined up for today. The focus of today's agenda is going to be on how Roger uses the data miner software every day to find the top seasonality and spread trade opportunities in the markets. And specifically, he's going to be talking about and sharing with us the latest updates coming to the data miner software. And they are impressive, folks. Once again, it's great what Matt and the team have been coming up with there on data miner software upgrades. He's also going to be sharing us why he likes waiting for earnings and why that's the best time for time spreads. He's also going to give us a special introduction into diagonal spread trades. This is something that he doesn't recall ever sharing with folks, and he's excited about this. He's going to talk about how they work and why seasonality helps them. He's going to give us some examples of diagonal spread setups and entries, and as a bonus, he's going to share the top stocks that are on his midday watch list. And finally, folks, if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone and we do have some ground rules. Number one, always be kind and supportive in your posts. Number two, keep to the topic. Number three, no political discussions allowed whatsoever. Number four, please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Rod's going to be sharing with us. Because after all, folks, he is taking time out of his busy day to give us an edge in the markets and to help us all become more confident and consistent in our trading activities. And with that, folks, let's say hi to Roger. Let's say hi to Matt. Gentlemen, great to see you. Happy Monday. Happy Monday. Roger, your closing comments I think were spot on. Anything surprising, anything new happening in the market that have you adjust your opinions on today?
No, not at all. As a matter of fact, I was just telling Richie and a couple of other fellas that here, let me just share my screen real quick.
All right.
And greetings and good afternoon, everybody. Good afternoon, everybody. Hope everybody's doing great. Please make sure you comment to everyone. Yes, as Ralph just said, thank you. Unless you want to post just for my eyes only. How are you doing, Raleigh?
I'm doing great. I had a wonderful weekend as you shared with the world. It was my birthday on Saturday, and the good news, folks, is I don't have to worry about being carded anymore. That was a big issue for me. But anyway, oh my gosh, my wife and my kids and my granddaughters, they all put together a special hoopla for me, and it was fantastic. So anyway, I'm all invigorated. I'm on to the next trip around the sun, as they say, and delighted to be with you here, Roger.
Excellent, excellent. I just wanted to say hello to everybody here. Welcome, greetings, salutations, and hello to everybody on YouTube as well. I think we are on YouTube,
Yep.
YouTube as well. For some reason, I think I just froze myself on YouTube. Maybe I didn't.
You doing, Raleigh?
Oh, I didn't mute my. I just want to mute myself. There we go. That's it. Perfect. All right. So here's what I was trying to get to. I was really surprised this morning, Raleigh. I was really surprised at the overnight range because the range, this was the overnight range right here. See how this is a little darker, folks? Or actually, no, it's a little lighter right here. This is the overnight session right here. So you could see the overnight session. And then this is where the day session starts right here. So I said we had quite a range overnight. And I said I wouldn't be surprised if today we stayed within this range. And as you could see, we kind of went out of it for like, I don't know, 20 minutes. But then the most of the day, we've been in today's range,
Yep.
which means we're just chopping around, which is very, very typical for a Monday, which is a very low probability trading environment. But no, there's no surprise, no at all. But what is interesting, mm, one interesting thing is, and this is pretty bullish actually. Um, I'm gonna go ahead and magnify this, and then I'm gonna put my mouse, and I'm gonna hit the left cursor button, and it's gonna highlight a price level. But when I do that here, I want you to look here, okay?
Okay.
So let me go down a little bit here. Oh, that's where I want to be. Okay. So you see these levels right here?
Mm-hmm.
This right here happened right. We took out today's levels pretty much right when we broke the 50-day moving average right here. The 50-day moving average is right there, right here, right here. Okay. That's it right there. So you see how we came out of range a little bit and then we came right back in. That's this tag right here. And I think pretty much for the rest of the day, we're going to kind of hover around this range and not really do much. Mondays are rough. The only time I really start seeing Mondays becoming instrumental is the last half hour of the day, which is why Raleigh and I were teaching you that method, the Monday turnaround method, over the
Yep.
weekend.
The True Trend Pro. Yep.
Exactly. Absolutely. So no, there's no surprises. But what I did want to mention is it's very nice to see that when we went to the 50-day moving average and came out of this area, investors or traders, institutions started bidding really, really hot and heavy here. That's really, really good. But getting the biggest, baddest split again at Clyde. There you go. There you go, Murray. All right. So I like how we're moving into this area here. If we break out of here, I think we're going to test this, and we may even come a little higher. But don't be surprised if we stay within the overnight range. Don't be
Mm-hmm.
surprised. So same thing, basically, and that would pretty much mean we're going to get up to the 8 and the 15-day right here, and the support is going to be the 50-day moving average, and the resistance. This is the daily is going to be the 8 and the 15, which are just on top of each other. Okay.
Okay.
Hopefully.
Hey, by the way, Roger, before I overlook it, on the small cap front, we did have one that hit and it made a nice little profit for us. That was AMIX. So,
AMIX.
yep. So
Oh, look at that.
the overnight high was $1.30, and right there in the first 15 minutes of the open, man, it jumped right through there and almost went up 15%. Came back a little bit, and then punched up to 20%. So clearly, people getting into that trade would have had a winning trade.
Excellent. Excellent. It's actually still right now at only at 115, so it's still not done yet. It could still potentially go up. But yeah, I would have been out of it by the time it hit the view up.
Yep.
So yeah, that's excellent. Excellent. See how I like it? Notice something interesting. Notice where the stock topped out at, right
Yep.
at the 200.
Yep. It's
All
amazing.
right.
How do they know?
How did they know? How did they know? They know. These guys know. They know what's going on. So, very, very, very cool. Very, very cool and very, very interesting. Okay. Yeah, very, very cool and very, very interesting. Now, what I want to do is I want to give you guys some levels, some analysis, and then I want to introduce and give you an update on data miner, and introduce a very, very cool strategy that you're going to see us trade, and I'll explain it to you in detail today so you understand it. Okay.
That's
Uh,
great,
I'll
Roger.
I'll explain it, and then I'll kind of explain what we're trying to achieve, and explain to you how we use it, and kind of give you all the information dealing with it. We'll do that as well. Let me just make sure. I Okay, I'll have to pull it up. Okay, no problem. We can do that in a bit. So good. Thanks for the heads up here. Now, folks, if we look at the mags right now, you will see we're right at the 50-day moving average. Okay. We need to get here. We need to get here. On the SPY, we need to get right here. Right here. Okay? We're still below. This is just choppy, chop, chop, chop. 50-day, 8-day. On the QQQ, same thing. See how we're right at the 50-day? It's not looking all that amazing here. This is not a big move right here. SMH, delete all this stuff. Actually, just go here. Wow, I use up a lot of these boards. Okay. Also, every predominant index that we're trading, folks, and this is really important. This is really important. I highly recommend you pay close. I try to focus on only the important stuff, folks. I try to stay away from the garbage. So we're between the 8-day and the 100-day. And you could see right here how we're just kind of pinched right now. This is a high volume candle on the SMH, which means there's a lot of resistance right here. A lot of resistance right here in this area, right here. A lot of resistance. Okay, a lot of resistance. So just so you know, a lot of resistance. Let's just say this: we've been moving in a downtrend, and we're already below the 8-day and the 2-week low. We're hovering between a 2-month low and a 2-week low right now. And if you look at RSP, which really is what the market is at, we're pinched between the 100-day and the 50. Market internals are reflecting this visual. But this has been kind of moving. If you want to get technical here, we really haven't gone anywhere. We're kind of sitting in this environment right now, which is why we haven't been doing much. It's just kind of sitting and chopping around. The market hasn't gone anywhere. We're going between 186 and 190 for the last, quite foreseeable. And I pointed out this morning that the same scenario is happening right here with bonds. Okay. So I want to make sure that we're all on exactly the same page. All right. I want to make sure we're all exactly on the same page. Sorry, I'm just looking at my alerts. Okay. All right. So as of right now, not only are we choppy because it's Monday, we're also choppy because we're sitting at the 50-day moving average. Not a great look for the market. And for all of you who can't make it for my morning show, just to remind all of you, I wish they had this on PC 2000, but I don't think they do. Well, they probably do if I looked hard enough. There's only 43% of stocks in the S&P. Momentum is turning south right now. Short-term volume is turning south in momentum. All right. There may be a short here, Matt. I'm not looking at divergence right now, but there may be a short here. This is 43%. And look here, if you look at Russell 1000, Raleigh, this is what's scaring me. Yeah. This is 1,000 of the biggest stocks right here. And you've got 38%.
Above the 90-day. Yep.
Above the 50-day.
Oh, the 50-day. Okay. Yep.
Above the 50-day. The only saving grace we have, folks, is every one of these is still above the 50% above the 200. Once this goes below 50, once this goes below 50, and I know people are going to argue with me because they just love to argue with me, but we're going to be in a bear market. And I don't care what the president says. I don't care what CNBC says. I don't care what your best friend says. When you have less than 50% of stocks trading below the 200-day moving average, we are what you call a bear market. This is a choppy market, and that's a bear market. That's when then institutions stop buying. Okay, till we're back above. And this is actually something I do know quite a little bit about. All right, so
interesting. And Roger, something that you also said this morning, which really stuck out in my mind, is you made a statement that you said, guys, if you want to know why it's been so difficult to find decent swing trades, look at this market going all the way back to August. It's been chopping sideways.
Yeah, I mean,
I mean, it was pretty profound, Roger, because it is. The market really
I mean,
hasn't, it's been stuck.
yeah, it hasn't gone anywhere. It hasn't gone anywhere. And when the market doesn't go anywhere, the stocks don't go anywhere, which
Hmm.
is why you have to. I mean, we've been doing, I'm not complaining at all.
No, it
It's
is
not an
what it
excuse.
is.
Yeah,
Yeah.
it makes it. Now, folks are asking me, well, Roger, we're still in a bull market. No, we're in a sideways market. You
Mhm.
see, when you have a bull market, you have a predominant tailwind upwards. When you're in a bear market, you have a predominant tailwind to the downside. And it's fun trading momentum to the downside because stocks move so much faster. So you can get
Yeah.
like a good 5 point drop in like 10. It's beautiful. Um, um, but right now we're in a no market. So there's nothing happening right now. This is the hardest market. This is the hardest market. I could trade a bear market beautifully. I could trade a bull market beautifully. But this market is a because you don't have follow through.
Mhm.
You don't have that follow through, that tailwind, that extra woomph to give you that cushion. But it is what it is. I mean, that's why we're doing time spreads. That's why we're doing straddles. That's why we're doing very short-term day trades. That's why we're buying options on our swing trades that have more time till expiration. That's why we're not following our typical 15-day stop in a lot of we're doing things that we need to be doing to prevent us from getting into more and more trouble.
Right.
But it is what it is. I mean, this is what it is. Now, if you're trading mags, then this is what it is. But if you're trading every other, all other stocks, this is really what it is. This is the market environment.
Yep.
That's just strips. That doesn't take away the mags. That just strips their market cap. That's just the equal weighted SPY. That's a real look at the market, by the way. That's a real look. If you want to look, I mean, unless you're just trading mags, this is what you need to look at that because that's the market. And QQQE hasn't really been I mean, here, drive right here. You got you got a head, a shoulder, and maybe another shoulder
It's more like a
developing.
shrug.
Yeah, just like a sideways head and shoulders. The point is, I'm not happy. I'm not happy with what I'm seeing. George is not happy. George is not happy. You got a head and shoulders here on the bond market, but I'm not loving this. I am not loving this at all. I'm not liking this at all. Yeah, just being very, and which is why I've been saying for a long, long time. Trade very small positions, be defensive, trade both sides of the market, and don't get married to any idea or any position. Same thing we've been talking about for a long, long time.
Good
Okay.
point.
All right. So let me give you guys stocks that I really like right now, and then I want to introduce you to this strategy and talk a little bit about premium data miner and all that stuff. Speaking of data miner, let's look at volatility real quick. Volatility's okay. Volatility's doing okay. It's not 5% is nothing. This is okay. This is not bad. What we want to see over the next few days, folks, is we want to see VIX come down here. If VIX stays here, we're going to be in heightened suspicion of nefarious activity. And remember what I told you last year. I told you VIX is going in last quarter. I said I expect VIX to be close to 20. Remember turning point. I did. I said I expect VIX to be close to 20 because we've got a lot of stuff going on in the world. Oh yeah, Ken. I said nefarious. Yeah, yeah. I did. I did. Now that I've learned to pronounce Chipotle, I can move on to more
Words with more syllables.
sure, of course. Oh yeah, yeah, yeah. All right. All right. Yeah, yeah. Some frisky behavior, Ken. Frisky behavior. You guys crack me up. Okay, let's start with the short side. Okay. There you go, Bodine. MET. Nice little breakdown on the stock. Real nice short. So, what story does this stock tell? Well, it's really choppy. It's really, really, really choppy. So it wouldn't be my first choice, but it's breaking down and it's in the financial sector, and most financial stocks have been going up. So I find this to be a good, and it's also breaking down below the American flag and coming down here and breaking a lot of levels, right? And intraday, it's been weaker than a sick dog. All right, let's continue. DVA, a nice. Now, folks, what kind of a pattern is this? Let's see if people are, folks can. That's right. That's right, Nicholas. An A line. That's right. That's right. It's an A line. That's right. You guys got it 100% correct. Okay. It's a very nice A line, and the stock is very weak. And again, it's a healthcare stock that's been going down, which is something nice looking stock. I like this stock. All right. Nike. I've been pretty bearish this stock. I wouldn't day trade this stock, but I think it's a good swing considering how much it's been letting go recently. Also an A line to the downside. Although it's pretty bullish right now, and it's been trading above the VWAP the majority of the day. So I would be very, very careful here. Steve Curry just signed a deal with Nike. Thank you, Pink Sparkles. Good information. Lee Motors, very bearish stock. Very, very, very bearish stock. Already had earnings, trading below the VWAP. Very nice. Very, very, very nice. Nothing not to like about it. NCLH, another stock, that's breaking down really nicely. And what does it do when the market's been choppy? It's been breaking down. That's a good sign for a short right there. Bros. That's a nice looking short. Real nice looking short. Buy that. Look at this. It's playing along the 50-day moving average. It tries to break the 50-day. It tries, almost does it, tries to break the 50, breaks the 50 for one day, and then starts coming right back down.
Mm-hmm.
It's below the American flag. It's below the 8-day and the 15 just crossed. Look, the 8-day just crossed back down. There's nothing wrong with this stock. It's a nice looking trade. Okay, let's go next. Team, same thing. Very nice. Went all the way up to the 100, but has respected the 50-day. It looks like it respects the 50 and the 100, but as of right now, it's just hugging down this area here, coming right down. Also, it's a software stock, which is not a bad idea for a short right now. It's coming up to the VWAP. It looks like it's having a hard time getting through the VWAP. I like this for a short. Probably can go all the way down to 146.50 today. C. Oh, wrong one. Lucid. That's very nice. That's a good day trade right there. I wouldn't be swing trading this, but if you want a day trade, it's got a little bit more to go. A nice day trade right there. Now, why a day trade and not a swing trade? If it was here, it would be a good swing trade. This shows that it's way overextended. Okay. Now, overextended stocks make the best day trades if you have really good risk and tolerance. Mm-hmm. My problem is if I trade the stock short and I want to hold it overnight, if it bounces back up here against me, I'm going to get stuck. I don't want to get stuck in this stock. If I'm going to get stuck, I want to get stuck at something right here.
Yeah, good point. Yep.
Do you guys understand? Well, I'm glad Raleigh understands it, but I want to make sure you guys understand the point that I'm making right now. See, I like to day trade stocks that I can hold as swings. I can't hold the stock as a swing. It doesn't have any staying power. You understand? It's already over the 1 ATR. It has no staying power for me. This thing can theoretically come up right up to the VWAP. Why do I want to be in the stock short that's going to bounce all the way to the VWAP? So a better suggestion would be wait for it to hit the VWAP and then go short. Now, if you are day trading, this is a great day trade. I could assure you institutions are selling the hell out of this stock right now. That is a guarantee. Okay, so you need to understand that distinction. And I make it to the upside and downside. It's the same thing, upside and downside. So it's okay to trade these stocks if you understand our scope. Okay. So because I get emails, well, Roger, why is this one okay and this one's not okay? Because I use the magic word. It's called day trade. Okay. All right. I'm glad you got it, Jill. Good, good, good. TSCO. So and okay, let's just take it one step further. So be realistic with. So let's just. Sorry, folks. I don't want to let go of a good learning opportunity here. Okay. So I don't mean to be like a nudnik, but this is important. So if you trade a stock like this, and if you're day trading a stock like this, you don't need to be buying an option 3 to 4 weeks till expiration. If, and I'm going to say it again, if you've committed to this being a day trade, okay? What do you need an option? You can buy this Friday's expiration. You don't need to go because you've committed to it being a day trade. If you did not commit to it being a day trade, first of all, don't take the trade. Second of all, you need more time. So I needed you guys. There you go. See, new words today. New words today. Yeah, yeah, new words today. You don't just come here for a trading lesson. You come here for education.
Hey,
See,
yeah, Roger, real quickly before I don't want you to lose your point, but several people here were wondering what did you mean by the American flag? And I'm looking at
oh,
this chart right here, and this might be a good one for you to point out that.
yeah, yeah, it's perfect. See, red, white, and blue. See, red, white, and blue. Last I checked, the American flag was red, white, and blue. If you should be buying stocks that are above the American flag and selling stocks that are below the American flag.
And those are moving averages.
Yes, this is and they're simple. This is the 200, 150 day. And you'll notice good stocks will be above. Now, I sometimes will sell a stock that's breaking one of them and head it into the other one, but I don't do that on your own. So sell stocks, short stocks that are. Notice look. Like let me show you MET. Look, let me show you MET. Blue, red, white. Are we below the American flag? Yes, we are. DVA. Where's the American flag? We're below the American flag. Nike. Where's the American flag? If you're going to ask me, does it matter what's above what? No, I don't care. As long as you're below all three. I don't care what's higher, what's lower, just as long as you're below all three. The order of it, let's continue. Lee, we're below the American flag. NCLH, we're below the American flag. Bros, I really like this one a lot. I may want to take this one. We're clinging on, but we are below the American flag. See the American flag, guys? Let's see. TSCO. We're literally breaking the 200, which is the American flag. That's the lowest one, the 200. So we are right here right now. We are definitely below the American flag. And if we were right here right now, I would say wait for us to break the American flag. We're not ready yet. Okay, NVR. Here's the American flag. That's the next one, by the way, on our list. Look how well it's curling down. It does, right? It does look good. It does look good. LCID, let's see what it's doing. Yeah, it's just coming down. I wouldn't try to buy this right now. Let's put it that way. Unless you like falling knives. And I like this one. Excuse me. I like this one quite a bit. In particular, because it's been coming off quite a bit, and chip stocks have been very strong. So we know that this stock has been little by little, it's been selling off. I mean, institutions are selling it. Remember, folks, the biggest key is, are institutions involved, and to what degree? Are they involved on a swing basis? Are they involved on a day trading basis? The more the more we can ascertain what institutions are doing and fall in line with what they are doing, the better off we will be. Not by trying to front run them, but by trying to align ourselves with what they are doing. That is a huge, huge edge. Okay. Now let's look at the long stocks.
You
Okay.
know, there was a
Yes.
question that
Yes.
came up from Phil that I don't know if you want to handle this, but he was looking at LCID, the 1121 options, and he was
Yes.
asking, why do they only go to 8?
Let's take a look. LCID. I like looking at LCID. Options. Let's go to puts. When you say go up to eights, what do you exactly mean by
Oh, he
go?
said, never mind. Those are the adjusted or ADJ options. Okay. Okay,
Okay.
Phil.
Okay. Okay. All right.
Initially, he was basically saying it looks like they only go to 8, but he was looking at the wrong thing.
All right. Not a problem. And if you do buy options on this, and again, if I mean, it's cheap enough to day trade. You don't really need options on it. But remember 0.70 delta. Okay. Um, let's now look at any other questions before I go to the long side?
No, this is wonderful, Roger.
Okay,
Wonderful,
good.
wonderful, wonderful. Everybody understands the American flag.
Very important to respect the American
Yep, it's a good
flag.
question. It's a good question. We take
Oh,
it for
yeah, it's a
granted.
great
Yeah.
question. Yeah,
Yep.
yeah. It's very important to respect the American flag. And again, you could see now we're going to longs. All our longs are above the American flag. Here and again, don't get caught up on what's above what blue, red, white. It doesn't, as long as we're above all three colors. Don't get too fixated on what color's leading and what color's not leading. So here's a perfect example. Now, this is a perfect example of a stock that I really like a lot, but I don't think I would day trade this stock. I mean, swing trade this stock. I think I would only day trade this stock. It's a little overextended. You see where it is? It's already penetrating this area. And you see when we penetrate this area, um, we tend to come back down to this area and sometimes even lower. But it's holding to 8 days. So what I would do is, assuming it had volume, I would wait for it to hit the VWAP, and I would buy when it goes below VWAP and then comes back above the VWAP. Okay. All right. So again, I like this stock. It's on my watch list, but I would be much more prone to day trade this stock than to swing trade this stock. Conversely, if it went down to the 8 day, I would probably take it as an A line, exactly like what we did with this stock right here, right there. See, I liked it here, but I waited for it to get here, and we gave it to you guys as a swing trade. What program is it in, Matt? Sting? I know it's in one of the programs. So, and I like how it bounced off the 50 and is coming right back up here. A-line. Okay, perfect. Matt, do you hear me?
Yeah.
Okay. All right. So that's what was it? Light. I like this stock a lot. And this stock is a great. This is a beautiful swing trading stock or a day trading stock. It's bouncing off the 8 day. It's a perfect A line. It's already above this high volume bar. It's now entering this high volume bar area, but that's not here nor there because these are pretty close to this. It's got an amazing relative strength today. This is a 9 out of 10. It's a very nice looking stock. Let's see. Spreads on the IE. There's always something, right? Spreads on the options are a bitch, but it's a great looking stock. Look how it hit the 15, didn't go lower, now back above the 8, and now coming back up. All right. Micron. Micron is trading above the 8-day EMA. It's not overextended. This area is not really that big here. Stock is just beautiful. I would not day trade the stock. It has no strength at all today. But I would consider it for a swing. I would actually consider it very strongly for a swing because we're near the bottoms. It looks like it's got good support. You've got the 8-day behind you. If anything, I would just hold on and wait and see how it does towards the end of the day. But this is a very nice stock. Just because it's been going down all day, again, I wouldn't day trade this stock, but I would strongly consider it for a swing trade, especially as it gets closer and closer to the 8-day EMA. Look how it bounces every time it comes out there, either on the 8 or the 15. Okay, let's continue. Um, CHRW. Now, it gapped up hard, but then what does it do? It assimilates the price. It assimilates the price right here. Assimilates it. So the fact this overextension goes, and if you're looking at RSI or any of those other oscillators, which I can't stand, um, this is you wouldn't want to trade it right here after this gap, unless you're day trading. Um, but this erases this overstretch. It gets overstretched, and this consolidation erases this nonsense right here. Okay, so this makes it whole again. I like this breakout. I'd like to see it a little stronger, but it's not a bad looking pullback at all. Okay, next is and Raleigh will ask me all the questions before we move on. So
Yep.
I'm not gonna just gloss by you guys. I'm just focusing on this thing. Newmont. Newmont's not looking bad, but again, you're dependent on gold, and gold is a question mark right now. I do like the trade. I do like the trade quite a bit. Right off the 15. My suggestion would be for us to wait till we get above 89.50, but I do like it. I do like gold right here, especially with more and more uncertainty coming into the market. Remember I told you, Matt, it looks like it wants to go down?
Yep.
Yeah. Are you short, long, anything?
No. Just look at the volt. It doesn't. It's
I'm
not
not. I
doing
can't.
anything.
I'm doing this right now. I have a screen up there.
Volt's not doing anything.
I got you. Okay, let's continue. EXPD. EXPD. That's a very, very, very nice. That's an A plus. You've got a beautiful daily chart that's trading above all of these levels, and you have a beautiful intraday chart. That's very, very nice. Very, very nice. I wish I could say something negative. And obviously, we're trading above the American flag and all that. That goes without saying. But that's a very nice. You see, look. See, you're not that far away from the 8-day, so it's okay for a swing, and you're above all of this action, so it's also a day trade. But and as a day trade, look at this thing. This thing has not pulled back one time yet today. I promise you. I swear to you, institutions are accumulating this stock today. There's no question about that. It's not a question. It's not an issue. It's just I don't know if they'll continue accumulating it, but this stock is being accumulated by institutions. This is the SPY intraday, right? This is the SPY intraday. Look at this. It's coming down, right? What does this stock do?
It's going higher. Yep.
That's relative strength, folks. That's relative strength. Okay, let's continue. But that's a beauty. That's a very nice one. So far, I got a couple of stocks. I got Bros to the downside that I really like. Let's look at that Lee Motors. Oh, it bounced nicely, and now it couldn't get above the VWAP. Now it looks like it's coming back down. LCID. Yeah, LCD. That's a stock that's being sold off right now. And then EXPD. I really like EXPD a lot. Nice, very nice look. Very nice look. Let's see. That's another stock. Now, Richie and I were talking about this earlier today. Day trade, yes. Swing trade, no. No. That's a very, very nice. Now, I want to show you a little lesson for all of you day traders out there. Trending hard on a 5 minute. This is 5 minutes, right? Stops trending. We get a flat bottomed HA candle right there, right here, and it starts coming right back up. They're really good for when you have a good trend. They're really good for turnarounds. Yeah, the market's coming down now. I told you, I think we're just going to trade inside today's range.
Yep. Just stay in the evening's range. Yep.
Yeah. So again, this is a nice looking stock, but I wouldn't be taking a swing on it right now because you've got a little downside here, risk, but you don't have a lot to hold it till it gets down here. But for a day trade, if you can get it at the VWAP right now, today, for example, I would be setting an alert, not would be. I'm going to set an alert at the VWAP. But then you got to respect the fact that um, you got to respect that it's a day trade and make sure you get out if it doesn't go your way. You got to treat it like a day trade. You can't change your mind later and say, "Oh, it's gonna be a swing." You can't do that. Okay. Another stock that's behaving very similarly to the one we just looked a minute ago. See, we got a little breakout out of a box right here. Still not too far away from the 8-day. That's nice. And every time it comes to the VWAP, what does it do? It's been above the VWAP all day today. It's nice. And it's defensive too. Yeah, I recommended TERN on Friday. I did. I said if you like small cap stocks, I did, Vivian. I'm glad you pay attention. I did recommend it. And last, MDT. Very nice look. Real nice look. Breaking out of this range right here. Look at that. Stock went down, went all the way to the 200-day moving average where it found support. It made it above the American flag, and it's been just hovering above the 8-day EMA now for the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days, making higher highs. It's picking up relative strength in the middle of the day, and it's almost overextended, but not quite yet. Gee, what do you think? And it's above all of this crap right here. Look. Hold on, I made this a little too big. There you go. That's a nice stock. Let me load it. I'm going to have to come back to that. That looks very nice. Very, very nice. Okay.
Well, Roger, before we
Yes.
leave this sector, there were several people that are very interested in the EXPD opportunity there, but their concern was, man, the options on this look way expensive, too much of a spread there. I was wondering if you could take a look at that and give some thoughts to people on that one, on EXPD.
Well, first, looks like you have monthly options only. That's a problem. So what I would do here is they're not that bad. You can go right here, 32 days out, and you can get the 58 call for 4, and you could sell the 145. You could do this for $2.40. You could do this for $2.
Yeah.
Yeah, you could do this for $2. You could do this right now for $2, which is less than $2.50, and your profit potential is 5. So you're good right here. Yeah.
Cool. Good. Thank you for that.
Yeah, maybe a good earnings opportunity. Yeah, I'll take a look at MDT. Maybe a good earnings opportunity.
Okay. I know we have a lot of stuff to cover, Roger. You're not going to believe it, but we've been 45 minutes on air.
Oh, you kidding me?
Nope.
I'm getting all warmed up and everything.
I know. I'm bad navigator. I should have warned you 15 minutes ago.
Well, it means we'll have to just spread out the next section for two sessions.
Yep.
Okay. So, all right. So, see you later, Ken. So, let me ask you guys a question. How many of you have liked time spreads? How I've been doing time spreads? Don't all hold your breath.
Yeah, don't hold back.
Yeah. Love them. Love them.
Love them. Love
yes,
them. Love
like
them.
them. Very useful. Okay. Karen, just okay. All right. Great. They're great. I love them. I would like them more. I'm sure you would. All right. All right. Okay. Time spreads allow you to take advantage of earnings using implied volatility. Well, and remember, we created Data Miner, and we're updating Data Miner right now with all optionable stocks. As a matter of fact, what Matt is doing right now, he's testing Data Miner to see that it doesn't crash because we've got so much stock data in there. I understand, Karen, but remember, you didn't get a name Karen the Shark from nothing. You got a reputation to hold on to, Karen. You're Karen the Shark. So, getting back to what I was saying. By the way, any update on that, Matt? When it's going to be done?
We're still working on it.
And you're still trying to get it done end of day today?
We're trying.
All right. All right. They're trying to see that it doesn't crash with all the options that we're loading on there, and then they'll do all the time spread options. But what the reason what folks love about time spreads is time spreads allow you to take advantage of earnings and implied volatility all at the same time. So a lot of folks have been asking me and saying, well, Roger, how do we take advantage of this amazing thing that you've just shown us when there are no earnings? Like this is amazing. Like I just want to do these babies all day long.
All day long.
I mean, this is an ATM. These are like these time spreads are like an ATM machine. You've got a win rate of 85, 90%. Your winners are like 35, 40%. And your losers, we've had like 2 losers in the last quarter. So I want to get in on these time spreads. Okay. Well, let me give you a hypothetical. Oy vey, let me straighten out. What if, so this is Micron, okay? This is Micron. What happens if I believe that Micron is going to continue either going sideways or moving up? Would that be a pretty good guess? Not jumping up sideways or just gradually higher. And what if I could sell credit right here? What if I could sell puts? Just sell puts as it's going up. Just sell puts. Well, you would say, Roger, that's the very, very quick way to the poorhouse. Because if you're selling naked puts, and if this thing goes against you, you're done. And Roger, we know you're not that stupid, and you're not going to recommend naked puts. So what are you really talking about? Well, I'm talking about diagonals. Let me explain to you diagonals. Okay. Sean, what's really possible is for you to stop writing and start listening. Thank you. So what if, hypothetically speaking, of course, see January, there's no earnings till December 12th. I want to find I want to find a good stock that doesn't have earnings till March, January or February. Hold on. Okay, this is good. So let's just say this stock is just going to go sideways or up, not down, anywhere but down, okay? And let's say, hypothetically speaking, let's see if it has weekly options. Okay, it does not have weekly options. I need a stock that has weekly options. Let's see. Okay, all right. What if, let's start this again. What if I sell this option, let's say right here, $0.30. And then when it expires, I sell next week's option for 40 cents. And then when it expires, I sell the following option for another 50 cents. And I just keep doing it over and over and over again while the stock is up. What do you guys think about that? Every week, I sell an option and I collect premium as the stock is going up. What's wrong with that scenario? Well, let me ask you this. How can I do that without risking going to the poorhouse? Cyrus, of course, it could be super risky. How can we do that? No, we don't do credit spreads. We're not going to get any premium. That's right, Richard. A hedge. What if we do the following? What if I go 60 days out? 60 days out. And what if I buy the 105 put, okay, for $6, okay? for $6. You could do this in any kind of account, Catherine, if you let me finish and showing you exactly what I am doing. You could do this in your IRA. I just did one in my IRA on Friday. I was showing Richard and a couple of other fellows about it. So what if I buy and spend my moolah, my money, and buy this one for $6? So I have a 105 put, okay? And then for the next 8 weeks, I sell a weekly put that expires on Friday. So I go in on Monday and I sell the one that expires on Friday. So for example, the 105. So I do the 100. So the 100 is 42 cents. And I keep doing it 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 over and over and over. What do you guys think? And what if I could find stocks that just had a huge earnings move and their options are really, really juicy? Where it costs us about $1.50 to do that spread. And we can buy an option that expires in 8 weeks. And we can just sell puts and take premium every week. And if all hell breaks loose, we have a long put that protects us 100%, which makes this into a diagonal, which is IRA friendly. And you could do it in your any account you want. Thank you, Desert Fox. Thank you. Right? And wouldn't it be nice if we had a way to match seasonality so we know when those options are getting a tailwind and when they're not? So we could sell options right at the end of their seasonality period when seasonality is just about to turn our way. Data miner. Data miner, data miner, data miner. Can you be exercised on the puts you sold? No, because those puts will be liquidated. No, I can't, because those puts will be out of the money, or they'll have premium. The only time you guys the only time you get exercised is when the option goes so deep in the money and it loses all of its intrinsic value that it's cheaper for the other party to exercise the option than to go buy it in the supermarket, the exchange, supermarket, aka the exchange. You see, nobody likes to spend more money than they have to. So it's much cheaper for them to just buy the option for a penny or two than to go and to exercise your option. So the only time they would do that is when you have no value. So as long as you liquidate these options before they have no value, you will be okay. And then nobody will have to come to you. They can just go to the supermarket for their option buying. Okay? All right. So what you're doing is this. In a nutshell, what you're doing is this. You're anchoring yourself to an option that expires 2 to 3 months from now. And then you're selling expensive as hell puts every week till your option becomes due. And what you do is, if the assets go up, you liquidate your position. If it goes down, you take profit on your position. And over the next several weeks, I will be demonstrating this, and I will be adding new functionality into Data Miner to help you find these options, in addition to all the other stuff that we will be putting in, that we've already put it into Data Miner. I just thought you guys would get a kick out of that. Pretty cool strategy, huh, Raleigh?
I think so. And you started this by saying, "Hey guys, I know you all like the time spreads, but what happens when earnings season is over?" And you still like that kind of hedged trade. This is beautiful, Roger.
Yeah, because what it does is it allows you to make money on stocks that are not doing anything. Puts have more premium after earnings. Yeah, so you do it with and then over the next few weeks, I'm going to be teaching you a lot more about this. And what I'm going to try to do is incorporate a tool into Data Miner where I could look at puts several weeks apart, and I could find the most expensive premium implied volatility put.
Oh man.
What you want to do this you want to do this right after, you want to do this 3 to 5 days after earnings on a stock when the puts are still pricey. So when when the option that you're selling can really pay majority of the option that you're buying. So by the time you get to the second or third rollover, you are way profitable. Jefferson, it's not complicated at all. Just takes you're just doing a diagonal. You're selling an option and buying an option. That's it. All right. So it's not 6 months, about 2 to 3 months. And you don't hold over earnings. Anyway, I will teach you more, and I will show you some examples of this over the next several months. And the tool we'll be using this for the option disparity and for the seasonality is exactly what we're going to be talking today. Data miner. This is the tool we use to find time spreads, and this is the tool we use for stealth search stocks. I'm going to be showing you this class right now, and I hope you guys take advantage of this. And if you have any questions, yes, Alan, data miner tool will be wonderful. These are easy, relative, safe, very easy and very safe trades. That's right. They're like verticals, except you're using different strike prices. Exactly.
You know what, Roger, crosses my mind, and once again, I know you well enough, but I can imagine you sitting there going like, wouldn't it be cool if data miner could be constructed so that it could help me determine the
That's
best
exactly
way to do it? And you're sitting there going, and your programmers are going like, okay, well, we can do that.
Yep. Yeah, they could do it. They could do it. So we're going to be finding, like I'm going to give it a criteria, and I'm going to say, find me stocks that don't have earnings over the next 2 months. Find me stock that's trading above the American flag. Okay.
Yep.
Find me a stock that's not overextended.
Yep.
Right. We know Data Miner does all that for us already, right?
Yep.
Find a stock that gives us, and then now match the best. Now find the stock that has the most expensive options that expiring this week, and in comparison to the cheapest options expiring in the next, say, 3 months.
It's fantastic.
Now imagine how long it would take you to manually do that, Raleigh, for every stock in the.
Well, we started today by going, let me find a stock. No, wait a minute. I need to find one with a weekly option. No, wait a minute. I need to find one that doesn't have earnings yet. You went through that and we came up with one, but I can't imagine doing that, Roger. I mean, I know what you're looking for, and now you're going like, yeah, I can write these rules.
Yeah. Oh, yeah. I could probably, yeah. See, and Matt, and again, why are we talking about data miner today? Well, today's a very important day. Today, Matt is stuffing all optionable stocks into the seasonality grid, and he's working feverishly on getting all the options done on the time spreads. So soon, very soon, it's a big pain in the ass manual process. You understand?
Matt,
so we have to do a lot of
Matt, unbelievable, buddy. Because
Yeah.
I know Roger initially, once again, data miner was fantastic. You were focused on the S&P 500 stocks. And then you said, well, why don't we just do it on all optional stocks? Quote.
Hey, they told me it could take it, so I'm giving it. I want all of them. I want every optionable stock. I probably should have just said Russell 1000, but I want all optionable stocks. So for seasonality, we should have that hopefully today, maybe tomorrow. They're testing it right now. They're seeing if it's too much. If it's too much, Matt, we could take some out. We could take stocks under $20 and things like that. But I'd prefer to have as many as possible in there.
Mm-hmm.
Yeah. All right.
So before we move on, I
Yes.
just want to let everybody know that this, the VIP portion of today's presentation, that's available to you on YouTube for the replays, because I know a lot of you are going, God, where can I watch this again? All you have to do is go to Roger's YouTube channel and look for today's VIP session, and it's there for you. As a matter of fact, it's there in real time. It's there right now. So if you went there right now, I suggest you don't do that because we have some additional great information to share with you. But once again, if you'd like to review that, just go to Roger's YouTube channel and watch that. Sorry, Roger. I just
That's okay.
wanted to let people know that.